Good morning. I think it's good morning and welcome. I've had a heck of a time trying to get my channel up and running this morning. Let's see if I'm actually live because I may not even be live here. Stand by. Upcoming. Notify me. Wow, that's a lot of notifications. 707. Well, that does not look like. Oh, yes, it does. We're up and running. Okay. Well, sorry about that. Good morning. I had multiple attempts trying to get on here this morning, and for some reason it kept saying forbidden. What's forbidden? What's forbidden? Anyway, we're on live. Welcome, everybody. My name is Darren Hancock, and this is the Breakfast Club. It's now February 2nd. Gotta love it, hey? Good morning, Hadi. I trust you had a great weekend. I hope you did. I think everybody's fine over there. Start streaming less than 60 seconds ago. Okay. Good morning, Maurice. It's been a good, it was a good Friday. I ended the Friday really well. We're up over 363,000 now. I was kind of hoping we'd be heading for that 24,600 level this week. We still might. We're just headed for that. We're back into the 4-hour here. Show you what we got. We're back inside here. For our price and balance. We had one side delivery, got a little bit on the other side here, but we've got an imbalance for sure. And we're also overlapping this previous gap way back here. See that? Like a gap inside a gap over here. And if we take that one and we include this one, this one puts us pretty close to the middle of that whole section. So we have a key important level here. So if we come up inside the consequent encroachment of this, I want to see what kind of reaction we get off of that. Whether or not we start to step up on the lower time frames, continue to step up through the 25%, 50, 75 on top, get on top of that. Because if we do, then I'm targeting this next set of bullish candles here. And we also have, see how all these little arrays start to overlap each other, all inside the big one, right? So there's lots of little points here that we're looking for a potential reversal for us to run down and take this sell side deeper. But until then, we're looking at 50% of this range. Puts us almost smack in the middle of 561. That's pretty much the 50-50 point of this whole run, this whole range here. That puts us inside the 4 hour here, 4 hour there, and puts us right on the imbalance, right inside that little small one as well. So let's see what kind of reaction we get inside here. There's lots of little potential points that we can see things changing up for us. So I want to see what goes on there. That's 4 hours. 1 hour puts inside another imbalance. This was the Sunday open, the new week opening gap. And let's see how we act inside that new week opening gap. And if you take the four, like the quads, you break this up into quadrants here, and you keep an eye on those 4 levels. Like there's multiple different overlaps. You can see them all here. These little dotted lines, those are all the midpoints. If I pull this one over, you'll see even more. See, there's just so many overlapping there. If we manage to get through this level, I'm going to be starting to target this SIBI, because that takes us right into the premium internal range liquidity hunt. We opened and closed right on the top of the SIBI. We're still below the 50%. Send it higher. And if you're going from box to box, we got to get through this bull trap and use that bull trap or this imbalance, the new week opening gap, as support to run higher. That's kind of like where I'm looking at right now. I'm doing very well today. Thank you very much for asking, Hidi. Morning, Hans. Hola. Good morning. Good morning. Very nice A+ setup around 8:30. Let's put that back to 15 minutes. There's a beautiful one right here at 3 o'clock in the morning, 3:30. Nice little tap of the bull trap. Once we broke it, come back, tag it, send it higher. You're looking for the next premium. It'd be here and here. So you're just looking for this last little run up into this portion here on a 15-minute chart to finish that off and see if it continues to run for the next bull trap above you, which is right here, which should put you right in the new week opening gap. So you got to start pumping through this new week opening gap now. First target is the consequent encroachment, which puts you right into that 15-minute premium box. The 5-minute puts you up into here. 536 all the way up to 600. And you're just hitting at 536 now. And you said 8:30, Hidi? Yes, that's a nice little tag there. I do like that. This one works great too. Tag finally breaks this order block, comes back, tags that order block, sends it higher, comes back inside this order block, steps on it, pushes higher, breaks the high, comes back to the high, send it higher. The models are still moving quite nicely. Midnight opens down here. And what do we got for Mark 3 this morning? That's the 3 a.m. candle. If you break that into quarters as well, see how you 25%, 50%, 75% top. So you see how the quarters line up, keep marching higher. And you take the quarters and use our technique of looking for the order block, the reversal, the retest, the extension, the continuation. That's all you got for continuation. Reversal, change below, back into 50%, box to box, hit it, change in direction. As soon as it breaks that high, it does, runs through, comes back, tags the SIBI and the order block because we have a body trade above that. Come back to the order blocks, mean threshold, don't want to overtake that, keep going higher. So you see all four of them, those models repeating themselves every day. Every day, same thing. We'll see what it's like here around 9 or 10 o'clock. We may see a stall here and then roll over and go back down again. What you want to see is 9 and 10 o'clock with no high created. They just keep marching higher. And then 11 o'clock, take out 10, then look for continuation into lunch hour. Good morning, Mark. Did you catch your Mark III this morning? Yes. This one's through. Wait for the structure break. If this ends up being just a small consolidation, you want to see a nice big displacement down with the pop back up, support and run lower. Again, I'm not miring the idea that we're going to go lower. So you see this consolidation, just pop below here, clear out the liquidity that wants to go higher, and then send it higher. And then again, we continue back into that new week opening gap above us. You did? Okay, good for you. We'll do a nice little drop it down, run above, run below, run above. And then we come back into it twice before finally going, taking these highs. Body breaks above them, come back, find some support, pushing higher, targeting right there. Five minute. Me talking to my AI. This looks like a nice little reversal here now. You're going to catch a long. Right there would be a nice little place to catch a long. You can catch a buy on that one. Stop loss below the low. I'm looking for that level there. Can you believe gold dropped $1,000? That's $4,400. And the high way back here was $55, $57, $5,600. That's $1,000 drop already. That's crazy. When have you ever seen a gold move $1,000? Got alone $1,000 in a weekend. That's some huge money coming back and taking people out. Now I've got to change in direction right here. Wait for the structure break. You're too close in terms of your premium level inside this range here. It doesn't come back and revisit it. We wait for this structure break here, for this breaker to get violated. Right there. It does. Gets used again. Sends it higher. What model is that? What model is that? That's the continuation model. And a beautiful continuation it is. So 46, it's up $200. You put a couple of handles on that. That's a wealth building month for you right there, just in 5 hours. Market structure shift here. We come all the way back up into the rejection block. That's an ugly candle. A body now breaks the low. You come back in, retest the mean threshold of this candle, or the consequent encroachment, whatever you want to call it, and then runs lower for the discount box. You run through the discount box, pretty close to running through the discount box. We have this BISI down here. Oh, if there's a little tiny one here, you trade. Let's have a look at that. Close above it, come back inside it, send it higher inside this range. You're at least 50% of that range right there. Touching an old low, midpoint of this wick. We don't get a body above the next SIBI. Get a change of direction, and we're back inside this little discount one again with the wick that does some damage. So you want to see this break market structure here to start running back higher into this premium box. Let's see, put it about here. For gold. Got 3 minutes to kind of blast through some of these. Silver's had a nice little reaction off of the bull trap. Send it higher into the premium. Premium's been hit. Rejecting off of the consequent encroachment of that. Now, if we just get a little structure breakdown in here and use this SIBI as support, we can come back into this range. If we don't, I want to see this BISI get taken out at 505. $81. That's another huge drop. It's another $40 drop. It really takes people out who've been riding on that. I don't know how our Russian friend from Guatemala, I don't know how he's doing. But I hope he was following the rules. I haven't got much for silver. Oh, I'm going to turn off my, my bot. This is a nice little short. It's talking to AI. It's managed to work quite nicely right now. It's just nailing some amazing trades right now. So still got some refinements to do, but we're zeroing in on it, man. I say we, I mean me. I'm zeroing in on it. It's going so much better now. And this, you've got to figure out a bunch of rules with AI. Holy smokes. It doesn't keep repeating the same mistakes over and over again. It can be quite frustrating. So you got to build your own little system around getting it to stop repeating the same mistakes over and over again. So it's a learning sequence or learning session for sure, trying to talk to AI and communicate in a way that it understands your directives. Anyway, let's go into so we have this market structure break right here, and we broke this BISI on the downside finally, right? So last week we were talking about how this euro was making a, oh, that opened up. Let's send it higher. Look at that. Ba-boom. Last week we were talking about this. We did not break market structure on the downside here. Then we finally get a breakdown through the BISI, a retest of the consequent encroachment of this, and then send it lower. We take out more market structure here. Now I want to see that get used as support. It does, sends it lower. Now I'm looking for this to provide support here and send it lower still. So we're looking for the American dollar, hit our carrot target last week. And now I want to see it come back and just use this consolidation area right here as support and send it higher still. Now that we've broken this, we've got range extension right there. Now this is a continuation. This SIBI forming above here, when you want to see the next 4 hours or so, 8 hours, you want to see that come back down into this level. So we got 3.5 hours left of this one. So you want to just create a small little candle here in the next 4 hours, then come back and give this a little tap right near the middle of it, like a graded response for an a B level response. That'll put you in the middle of this BISI if that is the low, and then send it higher. That would bring this back into this order block and then send it lower. And as you can see, euro, they're both suffering quite well, which is nice because that means our British pound, I still want to see that one drop down below here and use this to start accessing this discount box below us. Same with that euro CAD. Forward, nope. It's in the $9 range. I want to see it get down into the $6 range. I want to see this drop some more. Didn't we have a long here? Didn't we take a long in Bitcoin? I thought I took a long in Bitcoin in front of you. Wasn't it in here 5 minutes ago or something? I was setting it higher. I was below the low. What happened there? Did it come back and take me out or something? That's a nice little retest right there. The first little candle to the left, run through it, tag it, send it higher, take out the high, pay yourself. I'd still be looking for higher prices in that. I don't know what the heck I was just in. I thought I took a trade there. Ah, okay. There we go. Oh, it was this guy. It was coffee. Coffee? That's funny. That was coffee. Not Bitcoin. Okay, well, Bitcoin would have been a nice little entry right there. We're coming back, retesting this. Let's send it higher now. I want to see Bitcoin take out this bull trap on the 4 hour. I'm going to put that back as a 1 hour there. That's a terrible thing about Catherine O'Hara. One of our Canadian legends, actresses, comedian. She will be missed. Amazing. There, look at that. There's Bitcoin on a run. So if you would have caught that one this morning right here, then that would have been a nice little, you'd be into some cash there. Turn off all these things. You guys don't want to see all my drawings. Turn off my bot. There's a nice little run in the DAX this morning. Body breaks the high right here, right there. And we just come back, retest it quickly, and send it higher. That's a nice perfect entry this morning. A retest of this high again, right here. Then you want to see precision. Take that one there and draw that across to the bull trap, right on the high. Hits it, sends it higher. That's like a perfect zero drawdown. What can I say about Citigroup? We're still waiting for it to make up its mind what it's going to do off that consequent encroachment. It's hanging around on the bottom half of it, but it refuses to let go. It keeps spinning around and around and around in circles, like parallel, like those uneven bars. Just the spinning around and around and around. So we got to see the dismount yet. Look at that go. Finally. That's what I want to see, man. I've been in this for a while. So this has been, that's a nice 70% return right there. Since near the middle of January, that's a 70% return. Wow. But it doesn't pay any dividends either. Disney finally broke through the downside. It was waffling around in here. There's the watch level. It literally gapped down this morning. So let's see if the silver one just plummeted. Got nothing for copper right now until we get back above the premium. Look for this consequent encroachment of this on the Russell. Got nothing in there. Well, and we're back. We're back to the main market. This is all good. You got to be excited about this. You got to think, man, they got to come back and grab some of that. This is a 5-minute chart. Well, Mark is 3 to 3 is completed. That's excellent. The Mark III. You gotta love it. Look at that. As long as the time it stayed above the consequent encroachment, he's still in on his, according to his rules. It went in, created the 3 o'clock, and you go, I just want to see it break out of here now, and then I'm going to use the consequent encroachment as my line in the sand. Stop loss will be down here, I guess, against a radical rip through. And as soon as you trade up, you're back into it, tag it. You don't want to see that close below the mean threshold or consequent encroachment of the 3 hour on a 5 or 15-minute chart. It doesn't. You catch that long and you're heading all the way up to the one we're presently in right now, which is way up here. That's crazy. Good for you, Mark. Well done, man. Beautiful Marky Mark there. Yeah, I see where you're in on that, Mark. That's another 3 a.m. right there. So you're right on the lower half of that. So your 3 a.m. starts here at 683 to around 793. 683 right there. 683 to 693. Somewhere in that area. So if you went from box to box, that's a 400 to 700, 700. Depends on where he entered. But that's 400 right there to 700. That's 300 handles. That's enough to keep him fed for a few days. Congratulations, man. Good for you. Now, Mark, after you've entered into this, do you trail your stop loss behind there, or do you just scale out on the entry, the consequent encroachment, and then the high? There's the 3 a.m. That's the midpoint right there. It's the 3 a.m. center. Gotcha. And you trail your stop loss where? Like below the propulsion block, or below the Sibbies, Bissies? Like, do you have a specific place you like to trail them? Below the Sibbies. Okay. Yeah, see, that's a Mark. Sorry, that's a take profit model 5. If you just leave it at the right at the very bottom of each range, and every time a new range starts, you set your stop loss below the new range and let it run higher, and leave it at that new range until another new range occurs. So you can literally trade back inside that. So you're looking at 50, 62%, 70% retracement. You're okay with that all the way down to a full at 88%, and then a reversal. You just keep it below the whole range. That's what take profit model 5 is if you have higher time frame objectives. So now we're back through that 4-hour gap, that price action we talked about this morning. We're through that level. $724 or $729. That's the top of the premium BISI right now. And we'll see if $729 right here. We'll see if this provides some resistance. That's the buy side liquidity. Warm in this room. We're going up to plus 10 degrees today, or this week. And for us in Canada, plus 10 is crazy. In the water, you're washing your car like every other day. It just gets so mucky and you can't read your license plates. You can't see out your back window. It's terrible. Terrible. First world problems, hey? I can't see out of my car. Good morning, Shepard. How you doing, man? My girl and I were looking at wedding venues this around here for September, because I think we're going to get married on 9/11. 911, it's a paramedic thing, right? That way I shouldn't forget it. So it'll be September 11th that we're going to get married. Finally, I've been calling her my wife forever, and she's put up with me for so long. So now we're gonna do the wedding then, I think. So we're looking for wedding venues. So she's had plenty of time to try and find her freedom. Now she's stuck with me. So, yes, thank you very much, Lucas. We saw this beautiful venue yesterday. It was like beautiful, picturesque, panoramic mountain scene. That was nice. So we're kind of excited. We'll see what that's like. Then I'm heading back to England for a party with my family back there. It's gonna be crazy. It's gonna be all pirate themed stuff. I always wanted a pirate wedding, but she's like, "We're not doing a pirate wedding. You're not 9 years old. This is not a birthday party." I'm like, "Yeah, it is." So anyway, that's my year shaping up already. Thanks, Russell. Thank you, Abs. You got to meet her. She's a super amazing woman, and I've given her plenty of time to break free. I've left the back door open, and she's not running. She's not bolting, so there must be something she's enjoying sticking around. See this consequent encroachment of this 3-hour? We're bouncing around in there off of that right now. We'll see if we can push through that and then head for the next 3 a.m. candle. Hey, Mark. Thanks, Adi. Thanks, Hans. Oh, she says she's gone. Okay, so now we're at the top of the 3 hour. There's no trade unless you've caught it already. There's no trade right here right now. You don't want to chase this. Hmm. 842 to 860. $8.42 to $8.60. Keep your eyes on that level. Now, do you leave a piece on here, Mark? You've scaled out majority of your trade, I would imagine, and now you're looking for this to stay above the 50% of this, or sorry, the consequent encroachment or mean threshold of this 3 hour candle, and then you want to see that continue marching higher for your next 3 a.m. candle, and you're just basing it off of a little small portion. So if you've scaled out inside here, do you leave 10% on, 20% on? Do you reload it on at 50% and say, I'm going to be sitting right below the low there. I've taken my profit already. Like 395. Well, good one, man. Take your fib from the 4 a.m. 15 minute to the 15 minute 5 a.m. candle. take your fib from the 4 a.m. 15-minute. To the 5 a.m. Just like a fib projection tool you're using. I have one contract running. After running 4, I want it to continue based off the 3 a.m. candles once fib retracement from low to high using the wicks. And then you're using that as your extension tool. So your 3.5, your 4 bangers right here at 827. And trail up using whatever method. That's like a take profit model 4. Each subsequent one you scale out. So take it off at 2, 3, move your stop loss to 2, hit at 3, take a portion off. When you get 4, then move it to 3 and let it continue running up like that, this 4. So you're scaling out. That's a take profit model 4. If you're using those two as a projection from the 3 a.m. or the 4 a.m. to the 5 a.m. range. That's interesting. Why do you choose the 4 and 5 range? Is there some logic or reasoning behind that? Is it an ICT thing? Is it something you figured out yourself? That's an interesting little setup you got there. Markets work quite well for you. And historically, you know, if you go back from the first time you introduced that to us, that has been historically a very solid trade setup. PMI news. I only choose that range today because the 4 a.m. candle broke the 3 a.m. candle, which I put in a high, which just so happens to be the 5 a.m. We're tracing back into the 3 a.m. Ah, okay, I got you. Whispering as the snipers seek their targets. I'll keep my head down. I'm a journalist on the front line. There's a nice little retest. I want to see that roll over. But we got a news event right now, so I'd like to see that start to reverse here. Or if we close above there, look for range extension and then a continuation higher. But this is a short situation right now. And I'll just wait. You wait for a silver bullet here. Now the news is being released at 10. Retest again. Wait for this little structure. When you're in this range that deep and you have no SIBI below you, you have to use the range here, or the last down close candles. So you have to wait for a structure break to get down here. And the first candle to the left is this guy, so I want to see us break through here, find some support at that, and then send it lower. Because right now, remember that buy side liquidity we talked about over here? At on the 15-minute chart, we've now broken above that. Now we'll see how we've closed above that. If we come back and tap it now, that's a 15-minute continuation. So you can come all the way down into the bottom of the 3-hour candle and still go higher. See how we tap the top of that 15-minute buy side, which is right here. There's the premium. You ran through it. We come back, perfect tag, send it higher. We don't want to see this one give way now. Find support at that and continue sending it higher. Or you create a fair value gap in here now and then see a silver bullet, send it higher. So you see like an overlap going on. This is a 2, so I should see a swing high. Leave that there. 3, and a 7, 9, 10. There's the 3. Then you get a 5 will come into here, or a 7. Looking for a 7 to come back into the silver bullet here, or a 5 to come back into the silver bullet and send that higher. Yes, we are. We're right near the top of that yesterday's. Friday's 3 a.m. candle. Let's see what happens with 5 and 7. It's a wait and see game. Where's our coffees on the... I don't want to see coffee get lower than that. That we've already taken out 50% of this, haven't we? Yep. Boy, is that a big correction in silver and gold, hey? Still looking for downs on the Forex markets. Keep coming. If I can get that back into here, I'm going to start buying some of that for next month. Nice little change in direction here in Bitcoin. Trade all the way back up inside. Overshot more than 50% of this range. Trades back through it. Trades back into it right there. Then goes short. Targeting discount 1, discount 2. Rejection block. And now you're stuck. You don't want to see it get back above here on a close. So I want to see that continue rolling over, digging a little deeper now. See if we can get a little lower on that. The DAX, nice little run high. Let's push and try and get up there again. We broke through the upside, took out the high, came back down, tagged it. That's the next little zone right there I'm looking at. At 842 to 860. That 840, right inside that box there, we have overlapping arrays in there as well on a 15-minute chart. You didn't get a silver bullet here. So if that's a turning point mark, if you're looking for a turn, I'd like to see it turn around in here, right inside this daily new day opening gap, around 850 or so, which puts us right in our other little premium target here. On a 15-minute, that would be there to there. You got to include that actually. So I'm going to take this and go like that. That should include our imbalance here as well. Abs' 6 a.m. candles are sitting right here. That just gives you the midpoint of those. If I extended them all out, it would just be a mass of color. Makes it a little more difficult to read. So they're just lined up on the side here. This is the next 3 a.m. candle in historical. That's the midpoint of it right here. You have another one in here, and then another one up there. There's a lot of 3-hour candles all overlapping here. These are all the midpoints of 3 a.m. candles in the past. Yeah, it's overlapping, Hadi. You got the premium here, and you also have an imbalance right here. This is a volume imbalance. So I'll be looking for a retest of that, and they overlap. So you go from the bottom of this one to the top of that one. That'll give you the kind of zone that you want to see, how sensitive it is in there. So either way, that's the target. You want to see what kind of reaction you get inside here. And you can see how multiple confluences support that 15-minute level. Previous day's high. How'd you get previous day's high? Unless you're counting Sunday. Fridays, we haven't hit Friday's previous high yet. But this is an area I'm looking for right here. This little sensitive area actually overlaps on a daily as well. There's that original one I had in there at 42 to 60 is that daily. Go to your daily chart and you'll see that there's a volume imbalance here as well. So we'll see what kind of reaction we get off of that. The daily overlaps with the 15-minute here, overlaps with the 6 a.m., overlaps with the 3 a.m. So we've got lots of confluence in here to see what kind of reaction we get inside this area. So lots and lots of little data points all overlapping each other in here. No real entries. ES just hit ES just hit previous day. I'm gonna say like, oh, we're okay. I gotcha. There's Friday. Gotcha. Thanks, Hans. I thought, was he looking at Sunday or what? Yes, new day opening gap above an old high on Friday. Well done. Yeah. So that's pushing for looking for Thursday's high. Puts you right back into this P1, P2, P3. There's a P4 in there as well. So all these are targeted areas. At least 2, 3, and 4 have not been hit yet. So we could be targeting those up there yet still. That'll drive price even higher still. We clear out about above the previous day's high, or sorry, this new day opening gap. Didn't quite tag that, but we did get the top of the order block. Here, this little bear candle. You don't see it react off that and drive higher. Okay, there's the top of our little cluster right here and here. We've extended it out with multiple overlaps. And now I want to see that data point right there. Look at that, how sensitive that is. So let's see if we continue to push through that or start to work our way back through this little area here. Yeah, NQ's really lagging, hey? This is Friday's high here. So it's going to pick up the pace once get up higher. We're on top of the new day opening gap now, and we're just tagging it. So now you want to see it really react off of here now, which is kind of what we were delaying in here. You wanted to see this tag it and go. This just ran up a little higher, took out the previous day's high. NQ has not taken out the previous day's high yet, which is right here. There's where Mark's talking about the SMT divergence between here and here. Making a higher high and making a lower high. So we'll see what kind of reaction. If NQ refuses to get up there, ES does a run on liquidity, gives us a reversal, then you got an SMT divergence. We're looking for a quick reversal in here now. Get 12 more minutes to see what happens. And we're running into an area that we're expecting some sort of resistance. So we've broken above it, come back into the consequent encroachment. Let's see if it makes its run now. 896, 898. It's the next little buy side run. 896, 898, somewhere around there. That's the rejection block of the daily. You're talking my language. Ollie, you'll have to let me know what your what days are good for a meetup. Have a little chat in end of March, sometime in April. I'm gonna be in Paris in April. We're going to Paris for my wife's birthday. So we'll be back in England. I'll be there a couple more times in March and April. So if there's any specific time you got in March or April, Ollie, let me know. If you prefer weekends, evenings, I don't know if you're working full time. Let me know if you want to meet up. I'm happy to do so. Be nice to meet some of our subscribers. Russell, how are you finding this for sitting on your hands? There's the. We'll find a way. I got to get one of those 10-pound chips you can put in your phone. And you get like unlimited call time all over UK. So I'll let you know what my number is. We'll wait until the next macro. It's good. How are you finding that in terms of stress, anxiety? Do you feel like you should have caught something here? Are you beating yourself up? Like, what's your self-talk? Are you just chilling and, hey, it's Monday, we still catch? This is just all great gravy in here. This is all lovely zone to be targeting once we get a nice reversal, right? You compare this side of chop compared to this side here and say, which side would I rather be trading in to try and catch some liquidity? Trying to hunt it through that chop or this? This is nice. So we're digging into the rejection block now. I want to see if we could just take out those high in the next 8 minutes. ES is probably still marching higher. It's now taking out Thursday's high. It's taking out Thursday's high, and we're in well into we're in and through P1. Now I want to see if we start reaching for P2. We're so close to P2. We're into that new week opening gap now. Hit the top of the new week opening gap and you'll catch P2. And then you're looking all the way to the next new day opening gap, which happens to tag the bottom of this little structure break here. And it'll put you right into P3. Around 500 hands this morning. Patience by a D. Yep. Seriously, that Hadi, that Patience by Hadi cologne, we could have bought that out and sold buckets of that stuff if we would have had a perfumer come up with a scent, the scent of patience, the scent of relaxation and zen. We could have bottled that and sold it, man. We'd all be sitting here like this. The wife would be like coming in, closing the door. God, what are you doing? It's money, honey. It's all money. What are these other ones doing? We're still waiting for a turn here, hey? That 11 o'clock would be a nice little turn here. The next macro. So I like where you're looking there, Russell. That's not good. We're trading through this, all in one candle. Take your money and leave. I'll wait now, because through 3 arrays in one candle, so my ass is next. So that would have just staying in that for the sake of saying I want to see if that runs up my stop. It's definitely going to come from my stop, and if it doesn't, then I'll wait for a retest of this level and then go lower, or wait for a retest above the premium for going higher. So this was just a small 50% run on that range, and then I was expecting it to go higher off of here, and it hasn't. So if you get on the wrong side, just get back into the right side of the market. When it comes back into that level, look for a continuation on the downside. And we'll be looking for a downside run on coffee then, and get back in sync with it. Euro is failing. Euro is giving up the ghost. See how this level right here on the 4 hour, on euro dollar, is broken to the downside. And so you got this order block down here. You got one cluster, that's this one here, this cluster, this one here. We've had that low there taken, and we've traded through it, and you see how this one here is just wick through it. So you can see how it's failing here. We're definitely below the 4 hour. This one's just wicked through it, taking out the liquidity there, and it's refusing to go lower. So we'll see if this closes below here in the next hour and 33 minutes, and then comes back and uses that and this as support to go lower. And that will finally have to break through and catch up. Come back, find support at it, push lower into the discount. Look at a deeper part in this larger range here, so pull your fib on that. If you're trading Forex, there's 50% already. It's tagging that. There's 50% already through there. So if we can get down to 62%, 70%, that'll give us a fill of that range, and then you get your optimum trade entry reversal. I'll leave that on that one. See where that goes. We ran the lows out. That was the further extension. We're looking for range extension, but not continuation there. Oops. We ran back through here. A new low's created. I have nothing over here until here. And that's way up in the premium range already. Premium here. Wait for this breaker. Yeah, we got a lot. This is kind of choppy on a 1 minute, hey? If you take that on the high, right back to the bottom of it. Use this. Push. I've already got an extension. Let's see if we get a body above here now and get a cleaner entry. It's pretty choppy. There's the retest, looking for a run lower now. It's another entry there over here. Just want to see it break through here. There you go. Good work, Adi. I've already eaten through the mean threshold of this, which I didn't want to see it do. It's already broken the top of it now. We're into this one, so I've got premium level. If that doesn't hold, then it's going to come back and take me out. I'm on the wrong side of this. This is just a run on liquidity here. Now this is what my logic is. We break that on the close, come back, use it as support and go lower. And then you can allow for this premium to get tapped, which hasn't been hit, just got tagged the edge of it. So let's just run the high of it out there. So I want to see that continue going lower as an overall rejection block reversal. That's the logic I'm basing that off of, just in case you're wondering. Crazy Ivan 832. I want to see Crazy Ivan see you, come for you, and start running. Take that low there, and Crazy Ivan starts running into the 38. Take it lower. And I want to see it really, if my idea is going to work, if that rejection block, if NQ holds back and refuses to go lower, when ES is run up above 2 previous days highs, and NQ refuses to take out the previous day's high and just hits the rejection block, I'm looking for that reversal to happen and then drive it lower. So in the next 10 minutes, if it suddenly goes ripping up higher, then it'll take me out and I'll take a bigger loss there. But the logic is, if this refuses to go rejection block, I'm looking for any opportunity to see a reversal here. And I see the first reversal right there. So that's what I'm trying to capitalize on. So we'll see, we'll see if it works out. Yeah, that needs to hold for sure. And you see how we're waffling around here? Don't like that. If you've got intention to leave now, then send it. Get down there. This will also create that, if in the next 9 minutes, it'll create the hourly SMT. So you understand my logic? Oh, what it's worth. I'm looking at the 15 Hadi. I see it sitting right there. We're above the 15 minute though, and we're keying back off of the 15 minute. So the mean threshold of that 15 minute, and we've bounced off this. We've gone through the new day opening gap. We're tagging the new day opening gap. So we run the risk of just running this higher. I'm counting on the SMT to form here. And that was my logic. I'm just going to stick with the logic now and see if it runs me out. We got nice flat even tops as well, so we may get one more run up there. We'll see what happens in the next. See how the crazy Ivan hasn't really formed anything yet? It just sat there. Got 2 more minutes here to see what happens. I'm with you. If we break here, Hadi, I'm back to going bullish again at 890. But I'll wait for a structure break here. If I can get back above that bull trap, come back, find support at, then I'll look for a run on these highs here, which is looking like that's where it's headed. That's it. I don't want to see it get any higher than that now. That's run out the high. See how we've closed above this one here? And we waffled around in here. Did not get the run I was looking for. So now I'm going to look for this right here. Okay, so no run above just yet. Now I'd like to see it come back and retest this this guy right here. Before you take that high, come back into here. Now the stop loss will have to go below here. If we get this changing direction again, you can see how I can get beat up inside the consolidation. So I'm just using this as my last little drive higher. If we take out that little low there, then I'm definitely on the wrong side of it. And you're going to wait for a structure break now. And we don't get overreact inside this candle that's forming. So we'll just wait and see. Ideally, you don't want to see it. You want to see it just tag key levels. Like I would like to have seen it just come back to that, the bottom of this, and then leave and not put a wick in here. But it's where wick's doing some damage. We're back inside this BISI here. And I've got nothing down in here that supports going higher other than this last down close candle. See how we've closed back through that level? Inside this range, there's a small little SIBI right here, or a little price imbalance. So right there, tag it. Now you want to see that lead from there. So now this will go down to here. I don't want to see any more runs back into here. So that's like box to box there. This one hasn't been hit yet. This one has. So if this starts to run through here, then it's going to take me out again. Move to the sidelines and wait. Yeah. Gotta wait now. Looking for really tight entries, but not working. Tell me it's just gonna run that out there and then go lower. I'm gonna wait. Oh. Next bus is coming. We're gonna get it. Don't worry about it, man. This is the chop of consolidations, man. Ran through this one, ran through this one, retest this one. Wait for a structure break here now. If you're looking for a big blue bus, Sadi, depends on your bus. Big blue bus is heading south. Big yellow bus is heading north for me. Look at 9:55 candle on the 15-minute chart. The 9:55 candle. This one. This is your A-level entry. You want to see that just leave here. You don't want to see it come back down into here, digging down, digging. So if you're looking at 9:55, that's this guy here. No, 9:55. You want to see it hit the top of that. You want to see this whole thing reclose in here and then send it higher. So you want to see a D-level response off of this then. A full borderline pass grade to go higher. Got you. Or the 5-minute chart. This order block down here. Yeah, it's the same thing. You want to see, not only do you want to see the D fail, you want to see it go wick through the D, tag this 55 candle and send it higher. So you don't want to see that. You want to see this whole busy fail then, is what you're saying. Because you've got a reverse here on a 5-minute, another one, and another one. So you're looking at 3 of those. You want to see it just run back down into here, showing you this change in direction. So this would have to be the market structure shift if we lose this. You got a change in direction. You went through it once, twice, and now we're coming through it again. Consolidation. So I want to see this break the structure down here now. There's a small little break here. Body's finally traded through it here on a close. We're coming back in, tagging it. So I want to see if this little tiny guy right here, right there, holds price. Let's get rid of that one. Now we've got that upper zone. We'll see how we do act inside this daily new day opening gap. The consequent encroachment's holding. So you want to see this bounce off of here and send it higher. And you want to get all the way down into here. Macro is about to begin. Five seconds. If we close below here, we do. I'll come back and use that for a tag to go lower. Stop loss will have to be above that candle. Look at that, we're through the mean threshold again. That's the tagging of the, there's your line in the sand. See, there's already the mean threshold's gone already. Not what I want to see. I'm going to come right into the max portion of that. There's no reversal here. So we'd have to see this bull trap get taken to the upside to start running up higher again. And then it's back into another consolidation and the beating. So that has to hold. And then that would be 3 in a row for me, so I'd be done. That's it. That's the line in the sand right there. It's right on it. That's the, if you look at this one here, I can't even move that one because it's going to move my stop loss, but that's the little imbalance you see right here. See that? We're right up inside it. And we're just above it there. So that snap off of that is what I want to see. I don't want to see a revisiting of it, what we're seeing right now. I don't want to see that. So right there is the top. And if it takes out that low, then I'll take a portion one off that at that low, and then I can't move the stop loss to break even really because it's super close there. So I'm going to have to give it a little bit more room or leave it where it is. So close we came there. Just above that go no go line. Or this last down close candle. You'd be one tick above that. I'm actually sitting right on it. So it gave me a really good squeeze. The one where it starts to play chicken with you and you get to decide whether or not you're I'll take one off there. Now I want to see if it closes below this candle the next 33 seconds. So I'll move from one tick above this one to one tick above that one. Now I'll move to break even. Take one more off right there. Let the rest ride. It's 50% of the range. So look at this. Now you want to see this push all the way through down into this discount box here, which is a small one here, but I want to see if this premium here gets retested because we never got a retest on that. So I'd like to see this low or this low hold price, institutional order flow entry drill, keep pushing lower, looking for a deeper run down into like 70-75% optimum trade entry reversal will put us right in here. So that rejection block idea I had here, that was unexpected. So wait for a structure break. That was a big squeeze. That's where you sit there and play chicken with the train, hey? And then the train finally stops, reverses, and goes lower. And you saw how close we got there to getting taken out, so you can't flinch. So I don't want to see this whole thing stay fill in here now. So ideally you want to see just that consequent encroachment of this. Come back, tag that, and then roll over and go lower. Or now that if we can get a body below this level right here, I want to see this candle hold price and keep pushing lower. Right now there's no body below here, so we could quite easily reverse and go higher. So you can protect the rest of your trade. Most of it's off. 2/3 of the trade is off now. It hasn't recouped on our other two trades, but it's taking back some anyway. That's it. You want to see it stop right there. I don't want to see this whole thing fill in. I'm out there. 50% of this wick. There's the almost a full fill. We haven't broken this low here, so this could be another reversal. Wait for the bull trap to let go now to continue going higher. This is the macro time, so we'll see where it goes from here. Look at that right there. Did not quite fill it in. There's a tiny imbalance down here. You see that? That would have been another squeeze. But I flinched on the 50% there. The psych candle got me as it was forming there. It's like, you start breaking that 50%, I'm out. And it did. Around the lows. Again, no body below here yet. So I'm just going to wait and see what we got. We've swept into the discount portion already. We've swept the lows in here. And you still want that to fail one, two, three more arrays and come into here. Hey, hit the 776, 785 area. So this whole box down here is what you're looking for. You don't like it? Why don't you like it? It's coming to where you wanted it to come on a 5-minute chart. We haven't even reached it yet. You got 1, 2, 3, 4 levels of reversal you're willing to let go to get into that level there, Hadi. So far it's working out. We've got the change in direction here. Did not want to see it get broken. I wanted to see that keep coming lower. It broke it, ran the high out one more time, then gave you another reversal. Finally broke through that old one, retested it, broke the structure here, came back inside the structure, and that little go, no go line, hit the no go line and went lower. So that part of the trade really gave us a squeeze, but we didn't flinch on that. But I flinched on this wick right here. We didn't get a body through it. You got a wick through it. That was all it needed to throw me off. And then this is the one we want to see a body close below here right now, and it's not. So you're on target to hit your 5-minute Hadi. I don't know why you're worried about it now. You've got the reversal going on. You're just looking for, once you get to that level, now you're looking for confirmation that these start to become support levels to drive higher. So rejection block idea was holding. That screwed me. And so far, I'd be looking for this to close below here now. If we can close below that, then this whole area becomes support, and your order block I want to see give way to the downside if this is the reversal that occurs. And what we anticipated was this high did not get taken. ES took the highs and created the SMT divergence, and this is the rejection block. You want to see the change of direction. That's the logic I was looking for here. Just got thrown off there, that's all. So far it's now it's manifesting the way you want it to go, but unfortunately that's 2 losses there. That's a nice retest of this last down close candle. I didn't want to see that. I didn't even want to see it. I wanted to see this stay open, and it did the last little portion of it. So I flinched. Fair enough. There's plenty more trades there, man. Just stick with what you wait for your setup. And that's the frustrating thing you can feel, right? You can say, oh, the idea I had's panning out, but this turned against me. So if I continue to follow the rules, I'm going higher. Then all of a sudden it says, no, now I'm ready to go lower. I think, okay, So wait for a reset, market structure reset. It does. And now there's another, another market structure shift here, back into here, go lower. Stay on the game, stay on the ball, or on the horse, I should say. Now we've got a test down below at this. Now you want to see that go lower here. Right off there. And you don't want to see that whole thing let go. So this right here is what I'd be looking for right there. I wouldn't want to see it get back through here. Ideally, you want to see it go no more than 826, 827.25, right there. And see that wick? Not what you want to see. The 50% of that. And now see how we're right through the top of it? This is where it's choppy. You got to say, stay out of this. It's not acting the way you want it to act. Move to the sidelines and wait. If you're trying to force a trade here, the wicks are going to get you. If you're trying to stick to a very strict set of rules, you're going to get beat up. This is not hitting perfectly off the data point. You're getting these little wicks working their way through. Good for you, Hadid. There's always a new day, man. Right now I'm 1 for 2. But who cares? I don't care about winning. 1, 2, 3, 3, whatever. Just focus on the setup. Wait for the setup. When it's clean, take it. If it's not, don't take it. You're all out now, Ollie. This is almost a complete refill of this 15-minute premium. So we've gone through 1, 2, almost fully filled the third one. And there's nothing I can see on a 1-minute chart. 5-minute chart showing a change in direction. Change in direction. We've come back in, and now we're tagging that first one. So remember I told you if we get one candle that continues to travel all the way through, takes out one, there's your retest, and then stop loss would be above that, so that would have been a squeeze. We closed above it, you would have been like, as soon as it comes back into my trade, I'm out. You get out of your trade. Now you got to wait for it to break through this level. It does. You say, great, come back and retest that level. You can get short there. Next level you want to see supported, broken, then come back, find some support at it. So right now we're inside this 5-minute box right there, and you don't want to see that. So if you're looking for this to continue going lower, we do not want to see it start breaking back through here. Otherwise, that's really sloppy price action again. So you can come right up to there at 857. This right now is right into the consequent encroachment of 850. Right there. You want to see it roll over and go lower. Or 857 is the upside wick. You don't want to see a body break through that. That would be a nice place for it to stop. Leave that. Just hit the mean threshold of this candle in a 5-minute. And then roll over. Right there. 855. Absolutely. Don't risk it all on a Monday. That's a 9, 10, 11. This is the squabblers now. It's a little tiny imbalance right here. Right there at 60. This 50 I'm looking at right here. I'm looking at the breaker here. That's an up close candle. It's not really a breaker, it's a mitigation block because we don't take out any previous high there. So this mitigation block, I want to see right off the consequent encroachment there. I want to see that hold, roll over, and continue driving lower. If we start to close through that, then I'm looking for this bull trap to let go to the upside and then start hunting higher. And all this is just a retracement back into the premium, or sorry, into the BISI. That will be the fair value gap, 75% fill. That'll be your C level trade. You don't get the full D level. You get the C level trade. Looking for any sign of a reversal here. Well, here's your first little break right here. Come back, tag it, 50%. So I'm banging off of here, here, and here. I got 3 different arrays I'm looking at here. This one to provide support, drive back through here, or see this mean threshold give way and start to break our way back through this last down close breaker here. So I'm tracking both directions, specific data points to see if they hold, give way, and that's what I'm looking for. I'm just kind of tracking the upper and lower portions of this around here. Stay on the horse and spray it with cologne. Spray it with a little hoodie. You'll have the sweetest smelling horse in town. It's Monday, Bear Trade. Thank you, Darren. Done for the day. See you all tomorrow. See you later, Hadi. Have a great day. I'm still in shorts. Do I hold? That's the question. Do you hold? Where's your stop? Yeah, good question. Where's your stop loss? Right now, this is looking more bullish. We can get back through this watch here level. Look for a run on a range extension here. And then look for a continuation to the next bull traps above you. So I don't know where you are short there. Aditya Sawant. I'm just going to call you Addy. So Addy, if you get above this watch here sign on a close, look for range extension. And then if your stop loss is sitting way up there, you've got some more arrays to get through yet. But then it's already turning bullish here off of this candle. So the support, the 3 points I'm looking for is this midpoint of that mitigation block. I'm looking for the premium inside this range to let go. Then I'm looking for that to go higher. Or you're looking for this downside watch here line to get broken. Use the support and then push lower. Right now it's not looking good for shorts. Vitaly, yeah, we were talking about you this morning. I hope everything's good for you, man. And would you go over silver on the 1 hour? Yeah, I hope you didn't have too much sitting in on that when it took that dive down. So on the 1 hour. Nope. Look at this mean threshold of this candle here. Right there. See that? The body's respecting it, that candle. We're all the way up into the bull trap, and it trapped you and then sent you lower. Not that you're in it, but if you were wanted to go, you're hunting for these old highs again. Look at those levels we had, standard deviations we had before. That was 4 standard deviations. Bounced right off of it, went super low. Crazy. So anyway, this reversal you see here, there's nothing clean in here for a reversal. So we had a body break above the first bull candle, retest it, run up into the next bull candle's mean threshold. That's more than 50% or more of that range. So if you're looking for a run here on the hourly level, you want to catch a discount inside here. You want to catch it below that level there. So there's the retest. We didn't get a retest. You get a retest of this candle, but it's in the premium still. So you'd wait for that to get broken to the upside to go higher, and keep your eye on the mean threshold. You see it. Now you're going to dig down into the lower time frames. Look right here to see if you can see a reversal. So we're going to look at this 50% area right here, and then you're going to go down to the lower time frames. So we dig 15-minute. We're looking for a reversal here, right? So you've got one right here. You've got one right here. So as soon as it trades through that and breaks this little structure here, you say, now I want to see it retrade back into this candle, this premium, or this premium. So you got 3 different levels that are overlapping. We have a body trade below that candle. We come back in, didn't quite tag it, but you did tag it right there on that guy. Send it lower. So your reversal candle and your premium boxes are hit. Now you're looking for this to get taken on the downside. It does. Nice displacement candle. Want to see it come back and retest that. It does, and continues going lower. You want to see it break through this candle. It does. You want to see it come back and test this and send it lower. So I'm still looking for this to keep coming lower. We've come back to the midpoint of this candle here now. See how we've bounced off of that? So now you're between here and here. And that midpoint is already gone to the upside. I don't see any change in direction here. So you've got a bull trap, you've got a breaker, and you've got this little guy down here, this little bull trap. So you want to see that guy hold, this breaker hold, and this one reject one more time. So you want to see that roll over and come lower. If not, if it breaks through here, then you want to see more upside. There's your next one here. And I'd be looking for a bounce off of this right there. That's the go, no go line for a continuation on the upside to retest this premium portion here, or roll over and come back, like run all the way back up into here, hit the bull trap, hit the go, no go zone, roll over and come lower and start digging around. There's a little tiny imbalance right there, and never ignore them right there. Never ignore those. And if you do, and you discount them as trivial, they're not important, you're missing golden opportunities. This is in a super choppy, crappy kind of price action right now. So a lot of wicks going on there, doing a lot of damage, not giving you a lot of precision. But yeah, so watch this candle here. Watch this right here. You're already through the mean threshold of this candle. See that? So watch this guy here now. So if you were short and you're one tick above this high, look, watch yourself get squeezed here. You're well through the mean threshold of this now. You've closed above it, so that's not a good sign. Inside this range, look up here. Look for a retest of this. you've hit it once and you wanted to see it go lower, it did. It swept the low, body closed below that. So you want to see it come back and tag this wick, body, mean threshold of all three candles, and then you don't want to see it go above that. And it went all the way back through all of them. Closed right through the mean threshold. Your ass is next. So next upside is this block right here, and that's the lowest SIBI inside this range. It hasn't been retested yet. Right there has not been retested yet, so this could be just to come back, retest at the go no go line, and then roll over and go lower. If we get through it and support it on it, watch for this bull trap to let go, and then look for a run on the next liquidity pools that are sitting up in here. And they're small ranges, so I don't see a heck of a lot for you in there, man. So, oh yeah, we were talking about the hourly, weren't we? Looking for a change in direction here. So that's the change in direction you're looking for a lower on the hourly. Watch this pool right here on the hourly. There's nothing else down here other than this candle's mean threshold, which is right there, which is what we've bounced off of already. So you put your line right here on the hourly chart. So Carrot, you're watching for this zone right here to see that's your pop through it, find support at it, go higher, or roll over and come lower on that 15-minute chart. That puts you right up into this BISI here now, and we're coming into those lows. So that 1 hour BISI is going to tag the bottom of this breaker here. So we're just kind of watching here. And you're in the middle of this range, so I don't have a lot for you there. Vitaly, sorry. We broke through this now to the upside. See how we ran through here. Premium box right there, or sorry, the bull trap. Close above it, find support at it, run higher. There's your premium. We're inside that premium now. Watch this retest down in here. Now I want to see that go higher from here. I'll put one long on that. Just because I don't want to see it get back through right there. I don't want to see it get back through the mean threshold of that candle. So if this is like a institutional order flow entry drill, send it higher into the premium. We've had a slight close above the premium. So I want to see this really hold price here now. I'm going to give it some latitude to get back into this candle. We have hit the top of it. So the wick, 50% of the wick will put us right near the top of this old high. If I lose the wick and half that, then it's coming for a full fill of this, and I don't want to see that. So I'll have to wait for this candle to close below the order block for a sell continuous, right? For this, if you want to sell it, you'd have to wait for this bull trap to let go on the downside. This is if you lose this on a close, then I'd target these down here. But you're in a kind of a choppy consolidation. This wants to go bullish for me. That's the go, no go candle for me. It's got to start marching higher. I know you want to sell it, but you wait for a big market structure shift down here before you consider that. And don't forget, you're getting into lunch hour now, so we could do another run on this low here for lunch. If we lose this order block here and this, then yeah, maybe we'll take another run down here. Hey, what's the price doing now? Well, watch this level here and watch this candle right here. I got two areas. So this finds more support to go lower once we start closing below here and digging into this. This starts to close in, so you have your graded response. That was nice for a new continuation. And now we're back into it again. Not a good sign for long. But that 50% of that wick, I like to see that continue to hold. So we've talked about this BISI, 50% of that wick, the close, and the mean threshold of that candle. Those are your kind of like line in the sand, and that's the overlapping array you want to see hold price as well. So 50%, that's your B level trade, C level trade, D level is close, and that'd be through that by now, so I'd be not interested in that. So we're going to get through the mean threshold of that candle now. Now I don't want to see this get retested. It's done its thing down there now, and we're getting into lunch hour. So I'm keeping the stop loss tight, and I'm just looking for more upside now. Still have to wait for the candle on the downside. Break 3 PDRAs is my initial stop. Loss partial at either rejection block or 50% and trail a break even on the high or low. As ICT says, if 2 PD arrays have been disrespected, your ass is next. Yeah. I thought he said 3, but if you say 2, then you can go with 2. Mine's 3. So if you lose 3, your ass is next. Hey, what's price doing? Thanks for today, Darren. See you tomorrow. You're welcome. Thank you. I will definitely share the store of last week once dust settles. Hey, I'm short still. Well, if you're short, then I don't know where you're short from, but it's showing you there's been a reversal here. So if you're short, I've given you all the reasons why I don't think short is the play right now. If it reverses and takes out the low, this low here now on a close, then I'd say go short inside a smaller range, but you're still in a tight range already anyway. So I'd only be targeting down here, and then you could be bouncing around in here for lunch hour. So be careful there, Eddie. Mark, I think we're coming lower. Just think we're going to continue to test 61, the 4 hour. Yep. That may be true. Now I'm going to pull my stop loss into here, because if I lose 3 arrays in one candle, my ass is next. So that one, there's no high there now. It's the high and the open are the same candle. So if I lose that mean threshold, then it's going to come back and get me. So I'm pulling my stop super tight now. I want to see this get worked. There's the premium array again. I want to see us get back up on top of this and use this candle as support, and then start using our leverage off of this guy to push higher. That's it for me. I'm going to go to break even. If it comes back and gets me, it's got to leave from here now. It's too much waffling around for my liking. I'm out. So if we're going to break this market structure here, this little structure, then we're looking for a retest of this mean threshold of that 15-minute candle is 869. So again, if we close below here, you're closing below that mean threshold there. We have not broken above it yet. So I want to see us get up there. And it's not acting the way I want. So I'm going to wait on that one. Check out Tesla. I think it's going lower. Tesla. Let's add Tesla here. This is the daily 4-hour. This stuff works on all asset classes. All asset classes. Low taken. Discount box. Go no go zone. You trade through it, you come back inside the go no go zone, and it keeps going lower, albeit choppy, but then go no go zone is right here. Send it lower. Here's your discount box down here. All the way to right there. So you're right off the consequent encroachment of that, right back up into this one. So you kind of bounce in between that go no go zone and the discount box. And the next one down for you, once you get through here, is to hunt there. That's what I see for Tesla anyway. Look at that. See that? It landed right before the second one. Did not take it out. I flinched. Did not act the way I wanted to. Still going higher. Has not come back through the mean threshold of that candle yet. That's twice I flinched today. But broke. You break even on that trade. It's not a fail. So now I'm waiting for this. We've traded above that box. The next box I want to see us get above is right here. On the close. Now you're watching to see if we can get up here. So sorry asking you, but holding this because some loss on my funded account. Yeah, you're going to take a bigger loss here. If you're holding that for a short, you must have your stop loss sitting right up here. I don't know where your stop loss is or why you have where's your fail safe. If you have a fail safe, very few people use fail safes. Probably just because I came up with the idea, and that's why I call them fail safe. There's specific data points. If they fail, then your stop loss is going to get hit. That would be my fail safe. And I chickened out because it came too close to me, so I closed it out. Once again, the psych candle got me, and I'm not afraid to admit that. Stop loss would be typically below here. My fail safe is there, so I know that if I trade through that, my ass is next. It did not trade through that. Came too close, flinched, and I got out. So had I stayed in that, I'd move my stop loss to right here, because you don't want to see that get broken now. I want to see this and this act like support, right? So watch the mean threshold of this candle. And we have not closed above the premium yet. See how the bodies are sitting right on it? We got a bit of wick above the high. So if we close below this, take out that, then look for a run lower. So if you're holding on to that Addy, nothing's given me a short just yet until we break market structure here. So if your stop loss is sitting here, if it closes above here, it's coming for your stop loss. But you trade your thing your way. Don't take my advice. If you're looking, I'm not here to give you any advice. I'm just here to read the price action. You decide whether or not you're staying in it. JA, yeah, I'd like to see Tesla 2. I'm in that one. Just so you, let's just review Tesla again. So I want to see now Tesla hold the next go no go box for me, and Tesla's going to be right here. So you want to see it hold price. Now that we've traded through here, I want to see it come back into this box and tag it to go lower. So if we get a little creep back up in here, tags that, rolls over, you're targeting this top of this box here to the consequent encroachment of that box. And if you can actually get in the consequent encroachment, come back, tag the high, and then roll over and go lower, then I'd be looking for these equal lows below us here. Rejection block first, obviously, then the lows, but that's the no-go box. If you get through that on a close, look for the bull trap to let go, aim for the premium. If we can get through the premium bull trap, you're looking for these levels above you here again. Otherwise, I'm looking for this level down here in Tesla right now. On the hourly chart, this is a really nice reversal, taking out the high, change in direction. Your body trades below it here. You come back up. Beautiful tag for a short. You're looking for a discount box. My box-to-box tradings, or take your Model 2 is right here. Box-to-box. You hit it. You're done. Trade back into it. Go lower. That's your range extension model. Change in direction. We close open above our bull trap. Extension. Internal range liquidity hunt. So right there, as soon as it came back and tagged that, that's a long. Aiming for the premium up here, which is your last up close candle here. Hit that. As soon as you trade through that on a close, we're looking for a retest and send it up higher again. So you close above it here, come back, retest it, come up higher, pay yourself at the high or the rejection block. That's always a rule. If you don't get the high and you get this kind of reversal, you'll be glad you paid yourself at rejection blocks. No high broken with a body, so you can't target any higher than this premium box. It reverses on you. We'll probably see on the lower time frame where the reversal was in here. So we're going to start targeting in here. Let's go in here and see if we can see a reverse. Right here. There's change in direction right there. Trade through it. You come back up to it. Tag it perfectly right there at 43.6.75. That's a short right there. Wait for the downside to get taken. It does. Come back, retest the low. It does. Go lower, targeting the gap below you and this discount busy. You trade through it. Now you come back inside that level. You want to see that hold price inside this gap and that little guy there roll over, and now you want to see it come back through here and go lower. So this is kind of like the 15-minute go no go zone right now. Let me just spread that open to make sure that that's not so you got this gap. You have to keep playing inside the gap. There's a premium box revisited. This has to keep coming now. So look for rejection block. Midpoint of this wick, 50% of the wick, which is what that hit already. Now you want to see this give way, these equal lows give way and start targeting down below you here. That's what I'm looking for in Tesla. See how this box is holding price back? So now we've got this structure, this broken here and broken here. So now you want to see this hold price. And Addy, if you're still short, you've got your Lucky Charms on this morning. That you want to see hold price now, roll over and continue to drop lower. You've got D1, D2 here. And we're not quite hitting D2 yet, or D1. So that mean threshold has to hold price back now. Otherwise, we've got another swing. This gets broken to the upside, takes this out. Look for this to provide support at that reversal and keep pushing higher. So I can argue both directions here. Right now, I'm bearish. We've got a bearish move. But that will change if we get through that candle and we close above 880. That right there, you want to see hold price now and send it lower. Oh, he said 3. I mistyped it. Yeah, okay. Good. I thought it was 3. There's no short. Stay on the horse. Watch what's happening and listen to Darren. Wait, market structures of losing well is a big part of the game. It's true. I'm still holding shorts. Such slow market. You've got balls of steel, my friend, Addy. Or if you're a female, my apologies. I don't know who you are. Read Tom Hogarth book, Best Loser Wins. Or trading psychology book. If you chase losses, it's a downward spiral for sure. Just stick to your logic, man. Just stick to the logic. You see that 50% right there? Look at that right there. Now you want to see that keep pushing lower now. I want to see this stay open. That last little portion there stay open. It overlaps with my premium, this 50% of that breaker. Not really a breaker. It's a mitigation block. Did not take out a high on that run up. So that mitigation block, its mean threshold, you want to see hold price if it's going to come lower. We broke through on the downside. That's a good one. Retest would have been nice to see it go lower, but you've got to give it up to here. Your stop loss would be 1 tick above that high, and you want to see it go lower. So that's one of those graded responses again from below. You have your A level. That would be your institutional order flow entry drill to go lower, giving your stop loss enough room to grow. It gives you a little bit of a squeeze. It keeps your B level is right there at the consequent encroachment. Your C level is 75%, which is what that is, and D would be a full fill. So there's a graded, you get a C level trade on that. It takes the low, move your stop loss to break even, pay yourself at the low, and now you've got a risk-free trade for a short. So good for you, Addy, for holding that. You got some cojones, man, if you can hold that. I've just flipped to, oh my God, you flipped the longs now. You're flipping in the wrong place, man. That's a short. I just explained you the short there. So if you're long, that wasn't a long is only when you get a break above here, or this was a long inside this range, that's your premium. You get on top of that, then look for longs. Otherwise, as soon as you get a market structure shift, that's where the short is. So now we're targeting D1, which is right here. D2 is right here. So sorry, Addy, I'm not with you now. I was kind of hoping that you had some big kahunas there, because your stop loss would have had to have sat above here if you were still short. And now I'm short. This may turn a small loss into a big one. Cut bait and live to fish another day. So true. If you're trying to chase this, both sides in this tight market, you saw me get beat up twice trying to chase an idea that I had, and it came back against me. I got in again and then got hit one more time. Caught a short here to kind of mitigate some of my losses, but I think I'm still in a loss overall this morning. But no, I'm not going to play in that. So if you're playing in it and you're getting beat up in it, if you're following the rules, you'll see where it's actually turning and how you're getting beat up. So now we're looking for D. Now we're hitting D2. We're through D1 now. Now we're tagging D2. And that's just staying on the horse. That's not, I'm not here to beat you up and tell you you're wrong, but I'm just trying to show you where price, I'm expecting price to turn. And we called this mean threshold before it hit it. So you can see why they're that's a nice clean tap and then leave. That's got intention of leaving. That's what you want to see. So the low gets swept again. We get retest of the low. That's a nice clean continuation into D1, D2. Now what I want to see is D2 turn into the go, no go zone. They are defending 900. So if it gets above 905, you should get out. I'm long, actually, just asking. Okay, I have just reverted my position. I'm short at 901 being holding through. What about the longs here? No, there's no long here right now, Eddie. I really tried to hold, but it's very draining. You've got to ask, follow the price action. Eddie, sit on the sidelines right now, man, and study the price action, because you'll see it turning. You just got to, read it enough and you'll see where price is turning. So there's your discount box. That only becomes a further discount if we can break through it and it becomes the go, no go zone. And we're looking for a range extension continuation models. Right now, this is just an internal range liquidity hunt. It's done. It's done its thing. So now I want to see if, is there a bear flag in here somewhere? Right there. This bull candle right here and that bull trap now become our observation levels. If we hit the bull trap, roll over and come lower, the bull trap's holding. I'm looking for more downside in the discount box, because there's nothing in here right now in a 1 minute chart that shows me that I want to go higher until I break through right 868. 868 has to close above that, and then you've got mean threshold. So because they're so close, you have to wait for the bull trap to let go and then find support and start hunting for this above you again and these equal highs. Otherwise, I'm still bearish. Still bearish overall. Bearish just inside this range. Overall, we're still making a nice little bouncing springboard type of a bull flag, if you want to call it a bull flag, on a 15-minute chart to drive higher. So decide what time frame you're trading on, find your support levels, and watch how they start to get targeted. If you've already switched up 3 times there, Addy, move to the sidelines, man, because you're going to get beat up over and over again. No long here yet until we break the bull trap and take this out here, because this is, we're in a small range now. We're getting into lunch hour and it's going to compress. So lunch hour is where you can get beat up in. So you switch to a consolidation trading model during lunch hour, or just stay the hell out of it and wait till you see a significant market structure sweep. And if you're lucky enough, like Mark, to be in this at 901 for a short, he can have his stop loss covered. Now he's just looking for here. I really tried to hold it because being in a position is mentally draining. That is why it's better to trade 1 trade per micro. Give your mind a breather between each trade, or walk between trades, then come back fresh. Yeah, you really have to study price action and know a level that if it fails, you know it's going higher or lower. And that's the fail safe. And the fail safe is really a data point. For me, it's just a data point that says, if this fails, it's coming for my stop loss. My stop loss is there just to protect me against this quick run, a change in direction, and it rips through me and I wasn't expecting it. That's what the stop loss is for. But the data points are like, now if we trade above this level after taking this low, this becomes my new change in direction. And I have a new, right there. See that? See how we've traded above it? We come back, tagged it. Now we're looking for a higher run. So if we get above here, then I'm in a bull run, right? Because I've got a swing. I've taken out some lows, and I'm looking for a retest of the SIBI. So there's the retest of the SIBI. Now that I've closed above it, now I'm looking for the bull trap to either let go and let me through on a close, and then use it as support for a continuation back into a retest. So this would be this level here would be right here, be at what I'd be targeting for in the internal range liquidity hunt. Because this is sitting at 50% of that range already, you've got to close above this. And then you have to ask yourself, do I want to pay for a premium just to hunt another premium up here? Wouldn't. It's too tight. Not even going to mess with it. Unless this is the discount. And because you're in this discount portion here and you're right into the bull trap already, these 3 candles make your bull trap. You don't want to be, you don't want to play in that. This could just roll right up in here, get a bit of a wick, and then roll over and take that on the downside. So I have to see this support, and that's too premium for me. So if you really want to see it take off now, after lunch, and it's going into lunch hour, we could just see this roll over and just bounce around inside here during lunch hour, or marking time, as Michael would call it. And that's the gambler's mentality. You keep chasing it, right? All you would want to do is just stay on price action. Just study it, especially during this time. This is not a key time. You notice who's left? A D left. Why did he leave? Because he knows that till 11 o'clock, 11:30, that's it. That's his run for the day. I'm done. Moves to the sidelines and goes and enjoys his life. That's why he's profitable. He knows when to walk away and when the markets are getting choppy. And this is where it gets choppy. And if you've changed 3 times, Addy, then you're going to get beat up, man. And I can stay on the horse here, but it doesn't mean take a trade. You're not in the right time to take a trade. And you have to decide what that is for you and when it's good and when it's bad. I can't decide that for you. Study model 2022 from ICT. I'm really looking for discounted prices. Still, please tell me what. I'm really looking for discounted prices still. Please tell me what's the condition. Okay, Addy, I don't know what it is you're looking for. If you're looking for me to give you advice to take a trade or not take a trade, if that's what you're looking for, don't take a trade. Don't take it right now, regardless of where you think it's going. Because I guarantee you, I don't even know you, but just the way you're asking these questions, if this takes off, you're going to be one of those guys that regrets not getting in it. You're going to be pissed off that you didn't catch it and you knew that it was going in that direction. Your self-talk will be like, I should have got that. I could have saw that, because that's gambling mentality, man. You're going to get in your mind is getting in your way. And I know it's a judgment, but just the number of times you keep asking and you flip-flop 3 times already, you're gambling. Move to the sidelines and wait. Study this price action more, because it's not making itself clear for you and you're chasing price. Just based on what you're saying. And I'm not beating you up. I'm just saying, I'm trying to make an observation to save whatever money you've got going in the market right now. Listen to how your brain is acting right now. If this takes off, I want to see this take off. Then I want to ask you what you think is going on inside your head. And you need to journal that and get that under control. Because that's a gambler's mind, man. It just says, chase it, chase it. You're in long, you could make money. Look, you're almost out on your prop firm account. You're down low on your prop current. Get your money back. Revenge trade this. You knew it was going to go in that direction. Why didn't you take it? Oh, you were absolutely right. This guy doesn't know shit. You shouldn't listen to him. You should go with what your gut's telling you. All that shit is just gambler's mentality. Stay the F away from that shit. It's shit thinking. It is not going to serve you at all. It's not going to serve you at all. But you can continue to go through it. Everybody's got their own journey, man. Everybody's got their own journey. So anyway, here's that breaker, or that bull trap. See how we traded above the bull trap right here? And then we come back to the top of the bull trap right there, tag it, and then leave. So now what I want to see is, do we get above this level, find some support at this, and use that premium as support now to run for a range extension continuation model. I hope you're not fear of missing out yet. I know I'm gambling today. Oof, if you know you're gambling, you need to close the charts down right now and walk away. Don't even listen to the rest of this. Don't even listen to the rest of this stream. Just close it up, delete this, turn it off, and go. Because right now, if you know you're in a gambler's mindset and things start to go and I start calling it, that gambler's mindset will say, see, you should have taken what he was calling there. You should have taken that. Right? And it'll continue to work on you, and you'll think, oh, just one more trade, I can get back in. One more trade, I could close this at least break even. Just listen to what the guy's saying and just kind of jump in on his trade now. Or, yeah, you don't want that shit. You don't want me trading for you. You want you trading for you. See how that wick ran up, took that high, and we're still stuck inside this box? Wait. You're way premium right now. That little run to the box where you pay yourself, move to break even, zero stress trade, and you just let it run. It either takes off or comes back and takes you out. But you want to see that leave from here. Could lead to bad things. Don't do it, man. In Coach's Corner, there's a model I use, which is a model 2022 variation on Telegram. I haven't taken a trade today, and that's fine. Good for you, Russell. I may have to wait until tomorrow. If I force it more often than not, I lose. Then I get pissed. Vicious cycle. So true. Proud of you, Russ. No trade is a good trade day. Yes, I agree. Good things come to those who wait. Take care, brother. Good day for bulls today. Hoping the same tomorrow. NFP this week. So first 3 days will be for me. Yeah, agreed. See you later, Derek. Russell, thanks, Ollie. And NFP week can be hard to trade Yes, indeed, it can. I'm sorry to bother again and again. Just one of those days. Need to take some time off. You're not bothering anybody here, man. We don't want to see you take a loss. That's all. We don't want to see you keep taking losses over and over again, because this is good right now. You need to ask yourself what's going on inside your head right now. Do you have regret? Do you have doubt? Do you have fear? Do you have fear of missing out? All that stuff, and you need to journal that and listen to how you talk to yourself tomorrow. Because the rest of the day, if this takes off right now and you say to yourself, I was long, then all you're saying is you gambled. You were right to gamble, because you were right in both directions. At one point you were short, next minute you were long. So you can say, if this tears off and goes down, you say, I knew it. I was going short. It tears off, goes north, and you go, I knew it. I was right. You're just looking for ways to reinforce a gambler's mindset, instead of saying, what specific data points were we looking for that provided price for perfect entries, or at least to stay on the horse. And we said we wanted to see it break this high. It did. See how it keeps leaving? This is a chaser now. Anybody who chases that is chasing it. If that rolls over and comes back down and tags that, you're now getting squeezed. And if you've over leveraged, you're going to see this massive number over here that's scaring the crap out of you because you didn't follow the rule. Again, you have to have your rules, or stick around here long enough to understand what rules we've set. I've left my longs and switching off right now. All right. All right. You won't get a hell yeah, congratulations from me, man. It doesn't sound like you got the right mindset for this right now. I guarantee you're not switching off, though. I guarantee you're not. There's a retest for the high, this high here now. He's not going to leave this. He'll come back. There's the retest. There's your first out or fair value gap above a high. This is your institutional order flow entry drill. It's a C-level trade. 75% fill of that fair value gap. It has to leave here now, or no more than 50% of that wick. And I'm still not trading this, but that's what I'm looking for right here. You're still here, aren't you, Addy? You haven't really turned this off, have you? You're still looking. So there's your graded response. Keep going. As soon as that high is taken, if that's your entry, stop loss goes to right there, break even, pay yourself a little portion there, and move to the sidelines and let it run. You got a zero stress trade. Now you don't have that gut wrenching fear of missing out and all that other crap. This has now been validated. I want to see a tap and go. You don't want to see all three of them get eaten up. Otherwise, we're going to come back and retest this mean threshold here. Look at that. One. Come right back to the open and go. I don't want to see all three of those get hit. I'm not executing anymore. You're on a journey, my friend. You're on a journey. You've got some self-discovery to get through. And you'll blow a lot of accounts until you just discovered that A, you either don't know how to read price action, or B, you don't know how to read yourself. If you can't get yourself under control, that's the difference between a beginner trader and a professional trader. As somebody who can get control over those emotions. See how we're through that level already? Literally opened in the mean threshold. All three of them in one candle. 1, 2, 3. All hit. Your ass is next. So we're through that mean threshold of or consequent encroachment of that wick, which is a no-go line for me. So watch for a little punch through this level and fill that. There's no reason it should come back into here. For the fact that it is, we're lunch hour now. If it runs higher, great. Not acting the way I want, so move to the sidelines, man. I love your honesty, Addy. That's the first step, man. First step in recognizing, see, there's that low taken right there. That's the failsafe right here, right? If all three of them get taken in one candle, your ass is next. That's exactly what Ollie and I were just talking about earlier. If three arrays, 1, 2, 3, and you didn't know what all three of those were in that candle that is now supposed to provide support, if they get taken out in one candle and your stop loss is through the mean threshold here, then bang, it hit your stop loss. If your stop loss was down here, it hit it. Because it said, hey, look, I'm gunning for the low now. All three, your ass is next. And there you go. And remember this level back here didn't get tested yet. If you're long and you're going, oh my God, I'm getting beat up. I chased price here. I finally saw it break that high and I'm leaving. I'm just going to catch it. And you just, I'm going to throw it one more long in there. I don't care anymore. That's gambling, man. That's just pure frustration. And it's frustration to the point of saying, blow it up. Just burn the whole bridge down now. See how we've got a change in direction here now? We've low swept and we've got a change in direction. So now we're back inside this range and it's 12 o'clock. So I'm expecting 12 o'clock to create a high. There's my change in direction. So my long is no longer a long. It's back to short inside this range. And it won't be long again until I break that candle's high. See that? Change direction, tag it, tag this little swing point here, and roll over and come lower. And again, we're looking for if this level holds or this level breaks. If we trade back through here, watch for the mean threshold of that candle because there's this small little range there. Low is taken. This roll over and go lower, or because you can argue both directions when they're this tight, you want to see this SIBI get broken to the upside, find support at the SIBI and BISI to push higher. Wait for the mean threshold to let go, find support, and continue going higher. So that's what we're looking for. And that's two different scenarios. Let's see which one pans out. And then we'll see if those specific data points are met. Right there to there. And I'll make that a slightly different color. We're above it now. Mean threshold. See that mean threshold right there? Open on it, close on it. Now come back and give this a little kiss, and now send it higher. I want to see this high get taken. It has. Now I want to see range continuation from here. So this is like the continuation model. If we get a body close above here, wait for the body and the mean threshold to get retested. Otherwise, this little box right here, I want to see hold price, push higher, and not just have a little wick above that high. So watch here. And you're way up in the premium portion of this small little range here. So I'm looking at specific data points. This one here, this one, that one, here, and here. There's all 6 of those little points. Now we got a body above here. Tag this, send it higher. Leave that open now. Right back into the mean threshold. You're 1 tick below the low. That mean threshold's got to hold now. So in other words, this little candle right there has got to hold price. off there and send it higher. If it doesn't, then you're one tick below that low. Not that I'm telling you to enter this, because I'm not. It's lunch hour. So if this was any other time, one tick below that low, tag that, send it up. So quickly you can switch to a bullish. We were bearish right here. Then we switched, this candle alone switched to bullish. As soon as we took that out, lows taken, change in direction. And then all of a sudden, in the next candle, we did not get a retest here. Next candle takes this candle out. So now this becomes our continuation candle. See how we just came down, tagged it, closed up above it? That's continuation. That one little spot right there, that reverses and goes down on you. That is continuation. And then you're back to, you see how there's a little tiny bissy right here. If it closes below this, this now becomes our go, no go zone. That's how tight those little data points are. Welcome to lunch hour. Not executing anything more. I check back during next two macros, and that's it. If there's nothing, then tomorrow, honestly, letting my mind take, letting your mind take over. I should be off these long right now. How to stay. It's bouncing around inside here. It still says it wants to go higher on the higher time frames, and this is coming back into, now we've got support on a 5-minute chart to go higher. So you can go all the way down to 889, which is way back here inside this guy, which we still haven't got retested yet. So you can come all the way back to 889, which is the mean threshold of that candle. That's the line in the sand. You want to see it hold that. You can get a wick down, and you've got a SIBI below you, so you can get a wick. It's such a dodgy thing right now. If you break this, then look for another run back into this range here, 50% of that range, which is a SIBI down here, discount box. Just stay on the horse. Practice staying on the horse, that's all. This is the 9, 10, 11, 12. This is the squabblers. Took that to the downside. Now you're into a bearishness inside here. There's the go, no go box right there. You're trading through the no-go box. Now you're waiting for market structure to shift. 3 arrays in one. Ass is next. You just got hit right there. All 3 of them went straight through and took you out on the bottom. So now we're waiting for, is there a little tiny imbalance there? There probably is. Yeah, there's a little tiny one right here. So watch to see where this closes. And then I'd be looking for this line right here. So now we've closed. We have a range extension. Now I'm looking for continuation inside this range. So if you close through there on a close, then you're back in this range, and you're looking back up here. There's P1, P2 is right up there. So wait to see where this closes. Look at how much these arrays are overlapping one another here. Welcome to consolidation. That wick right there, right up inside the premium, the go no go box, ran through the next little no go box into the previous one. Now I want to see the continuation and see how it's running. That's the continuation model right there, from here and here. So no go, go no go, go no go. Wick ran to the no go and no go and kept going. So it's working. It's staying on the horse. So watch very carefully. There's extreme data points in there. And you've got to be really quick and savvy to catch them all. But that's the continuation model. So you paid yourself at that low, put your stop loss break even plus the cost of the trade. You don't want to see this get revisited now. You want to be just above it. So if you entered in right there, you paid yourself right at that low, and now you're risk free. So now you've got your heart's not beating out of your chest. You're risk free, your internal range liquidity, and we're hunting for the next run down, which is right here. So I target that. As soon as I got there, I'd pay myself one more time and move to the previous stop loss. And this is just a matter of, say this over and over again. Stay in price action. Study this. Don't worry about hitting these stupid buttons up here. That's a whole new level of stress when you hit those buttons. Once you identify where price is going, what you want to see, and if it's not acting the way you want, either you need to study it closer, or it's not acting the way you want, move to the side. Oh. Then you're out. Rules are rules. Can't reinvent the formula. I have tried. Darren has tried. All of us. It's true. You can't arm wrestle this, man. You can't arm wrestle this. No more new executions. You've said no more new executions several times now. So you're saying these should play out to BSL. You're way too focused on trying to make money and not studying price action, Addy. Way too focused. See how that little reversal going on right here? We didn't hit the target we wanted, right? Then you got this, which is a volume imbalance, closed above it. We've already taken a low, so you're always looking for a volume imbalance. You're looking for an immediate rebalance. You're looking for fair value gaps, price imbalances, all those kind of things, the first indication. And there's your 16, 17 reverse, 17, 18, 19 reverses on 18, and then 2021. And if you don't know what I'm talking about there, you don't even go there, man, because that's way more advanced than you are ready to see right now. Small internal range liquidity. Not that you're hunting this, because it's lunch hour. Stay the hell out of it. 62% retracement. We've got a change in direction. You did not get a chance to retest it, so you can't get the trade. Hits 50% already, so you're done. You can't get into that. You've got go, no go box again. You've hit it a second time, which if you're going short, you want to see that leave, right? This is the breaker that takes out this high, those three candles. You're already through the mean threshold of that candle. On a close, we're using it as support now to run higher. There's your premium box hit. Now I want to see that premium box hold and come back and retest this little guy down here. If it doesn't, and we're already above this no-go box, you're not going short anymore. It's a no-go situation. We're going higher. So you want to, now you're stuck between here and the no-go box. If you trade back through the no-go box, well, again, welcome to consolidation. And I think that's it for me, because that's lunch hour and you're just going to chase around with price. So I want to see if we can get back into here. Anything can happen, Addy. We take it candle by candle and manage positions from here. If we're just staying on the horse and you're chasing back and forth, then you're just going to get hammered. It's better to just watch and wait for optimum trade times. 9 o'clock this morning. Wouldn't you rather be in this kind of stuff, Addy? We've got a consolidation. We have a break above this little swing happened here. You break above it, come back, find some support, right at that point there. Wouldn't you rather be in on perfect entries like 539 and run all the way up? Oops. Wouldn't you rather find stuff like that? Perfect entry. And then worry about, well, my stop loss is sitting down here. I'll let it muck around a bit. Next one, we get a new range created. Stay here. Next time we get a new range created, you stay right here. So you're in from way down here and you're just stress-free, man. You're like, I don't care. I'm sitting right here. Let that buck now. If we break this whole range, then I'm on the wrong side. And I've made my money for the day. That's the kind of stuff you want to get. You don't want to be trying to jump in on every freaking turn that happens in here. I'm calling it because I just want to show you how to stay on the horse and what specific levels to look for, when they hold and when they don't. So then remember that little level down there, and what does it run for it? There you go. Done. Now whether or not we close below that, different story. Anyway, Trump reduced tariffs from India. Thanks, got to run. See you later, Shepard. One more time on silver. All right. And then I'm out of here. There's the silver upside. Look at that, right off that discount box right there. Wow. Was that a different, higher time frame we looked at? Yeah, mean threshold of that candle. Look at that bounce off of there. Look at that perfect little bounce right off there. So as soon as you see that level hit, now go down to the lower time frames and look for a reversal there. So there's 15 minute, right? Is there a reversal there? Probably not. No. So then you say, let's go down to the 5 minute. Do I see a reversal in here? All right, now we're getting close. Now we're saying, oh, look, there's a nice little 5 minute right here. And I'm saying to myself, wouldn't it be great if we can close above there and come back and tag that? That close right there above that level. Look at this candle's low, which is 330. Look at this candle's close, which is 395. So that closed above that level. That validates this. As soon as it trades back into it, you get long, literally right there. All three levels you can scale in. And you're heading for premium box. That gets you in a discount inside here. Premium box, get your 50%. Now you wait for a body to trade above that. Trades above it, you come back. Now if you lose 50% of that, look for a retest of this. You lost 50%. It did not retest that. It just came back and filled the BISI. Wait. Now you got to wait for market structure shift because it's too choppy in here. Come back. See how 50% is lost again? Now you're back to here and here. Those two candles. There's a little SIBI right here. If you lose that on the close at 78.40, then we're looking for another run back down into this little SIBI below us. So watch right here. And you're getting into lunch hour. So again, be careful. You close below that, watch that level to get retested, and then send it into this box. And if you get through that box, look for a retest on this box here, and I'd be targeting something like this. So watch that to there, then watch that as the no-go line to run to here. Pay yourself at the respectable places. So here, this reversal you see right here off of that key level, that's the reversal. Pay yourself, you're stress-free. You're stress-free. As soon as it takes that candle, pay yourself. Move to break even. That's where how you take a higher time frame premise, which was the mean threshold of that hourly candle we talked about. It hit it perfectly, and now you say good, and now it's got a nice little reaction off that. You go, great, if I can get through that level there, that's my mean threshold held. I'm looking for targeting here. Or go back to your 1 hour chart and say, what am I looking for inside my 1 hour chart? I'm targeting this premium box right up here. So if that little short or a little long that we just looked at on the 5 minute says that's my target, I'm aiming for a reversal here. If I can catch that and I'm targeting my premium array above me on the 5 minute chart, you see your entry here and you're targeting that premium box, which is where the carrot is. Bang, you hit it there. So you got an entry here, squeeze you a little bit, and then finally ran to your target and you're done. Move to the sidelines. That's your internal range liquidity hunt from a 1 hour objective to a 1 hour objective. And your 5 minute entry. And you see on a 1 minute, see if there's a 1 minute entry for you here. Here, look at the first order block, first bullish candle to the left, right? Bullish candle to the left, we close above it. Look for a retest of it, go higher. So you can get in right here. Instead of up there, you can get in right here. Or you just wait for market structure or for this bull candle to get broken to the upside. It does, gets retested right there, sends it higher. So then your stop loss would sit below that low. As soon as it broke that high, move to break even, pay yourself, and let the rest ride to your objective. That's using lower time frame to find your entry off of a higher time frame. Does that make sense? Hopefully that makes sense to you, Vitaly. And that way you would have got your entry here and targeted right there. After break, Trump reaction, one more time. Yep, you are still amazing. Thanks, TB. You're all amazing, and you can all be amazing. And Addy, I really want you to slow down, man. Slow the F down, because you're going too fast. Stick around in here. We'll help you out. Just slow down. Stop worrying about trying to make the money. I know it's important for you, but it's gambling, gambling, gambling. Until you can read the market, you are gambling. We're gambling at the best of every time you put a trade on, you're gambling. But at least put the odds in your favor. Get the trade sequence down, get the rules down, and then get yourself under control, and then you'll become a professional trader. Until then, if you don't have those three things, you're wasting your time. You're throwing your money, your family's money away, your future away in a market that is more than happy to take it from you. More than happy to take it from you. So don't do it. Stay out of it. Learn before you can earn. Until then, I will see you guys. Look at that chop. What a bunch of crap. Welcome to lunch hour. Anyway, I hope you guys got something out of that. Thumbs up, like, subscribe, all that kind of stuff. I'm here for you guys every day. I'll help you out studying that price action. I'm not here to give you trades. I'm here to just help you guys understand price action. What you do with your trades is your business. You make or break your living off of that. It's entirely up to you. Look at how sensitive that level is. Crazy. Anyway, I will see you guys tomorrow, bright and early. Keep your stick on the ice. Be kind to each other out there. Take care of each other. Take care of yourself. Talk nicely to yourself. Neuropathways, neuroplasticity, man. You want your brain to thrive? Talk positive. It does not thrive too well under stress. Positive reinforcement. Literally think your way into a new life. It's possible. Look at the research. There's tons of it out there. And I will see you guys. See you all tomorrow. Sending the love, my friends. Take care. A lot of love. A lot of love. I'm sending the love. Sending the love. Thanks, Dave. Love you, man. I'll see the rest of you guys on TradingView there, or sorry, on the community chat. I'll answer any questions you have. There's guys in there that will help you. There's genius level guys in there that really know their stuff. So pop in there, see those guys. They're willing to help you out in any way they can. Russell, smart moves today, man. Staying out of that, observing it. Good discipline. Well done, my friend. Well done. See you guys tomorrow.